Hi everyone, hope you're all doing well, and today I'm going to talk about my new UK stock. So I did start buying this new UK stock last week. It finally got to the valuation where I was like, okay, I'm going to start buying this one, and I'll kind of go through the reasons why I'm buying it, the pros, maybe some of the risks with it as well. It is a bit of a beaten down stock on a bit of a downtrend, so I will point some of them out as well. But yeah, hopefully this video is useful and we'll get stuck onto which stock this is. So my new UK stock is ASOS. So if you watch my free UK stocks to buy September edition, I did say that at some point I could see myself buying this stock, maybe not at the start of the month, but maybe towards the back end of the month, and I went and did that. I bought some ASOS. Just on a bit of a side note, I am thinking about maybe skipping free UK stocks to buy October edition, just because I feel like the free UK stocks I would mention would be no new company. It would just be kind of stocks I already own, and I think sometimes people get a bit bored if I just carry on talking about the same free stocks all the time, even though when you're a long-term investor and you're only going to own probably like 10 companies or 10 to 20 companies in a portfolio, then you are probably going to talk about the same companies. But I'm not sure what I'm kind of thinking about that, but I thought I'd just let you know. And I don't know if any of you guys want to suggest something in the comments anyway, but getting on to the ASOS video and my new UK stock, which is ASOS. I did start buying some. So if I do zoom in for like the last let's go from here, the last 5 years, you'll see that ASOS actually had a very good 2016 up to 2018. 2018, you'll see that something happened here. So I did have to have a bit of a research here. So you can see that the stock lost half its value from about 2018. And back then you can see that we were talking about a stock here that was £70+. And that's actually the highest the stock has ever been valued. It's been very close actually back in 2014, but that's near the peak. And then something happened in 2018. The stock fell off a cliff, and then basically 2019 was a bit of a year of finding the feet a little bit in the stock price. It didn't really do too much, but then what you'll also see here is this dip here, which obviously lost another half of its value, which obviously we all kind of know that is the CV dip that pretty much a lot of stocks had. And then from about the CV dip, you can see the stock, and congratulations if you bought right at the bottom there, look at that, boom, 400%. That's always why it's the best to buy in a crash or a correction, or when stocks lose a lot of value. And then it did really well, and then since about March time, the stocks once again it's lost half its value again. So even in this kind of like a 5-year period, you can see this stock is a bit of a volatile UK stock. So yeah, that's something to kind of keep in mind, that this is a stock that kind of moves around. But you'll see here, this company's lost a lot of value recently, and it's been a really ugly kind of couple of months. And my first kind of thing that instinct starts picking up is, okay, only on the 24th of March we were at 5,734. And now we're down at £32.65. And it's like the company's lost half its value, and me, I'm thinking, is this a buying opportunity? Can I make money off this? And I'm going to say this point here, and it's worth saying, this is an ugly stock that fell off a cliff. Back here I was interested in it, never ended up buying, and then we even lose a bit more money after that. But sometimes people don't realise this, and it's stupid. I feel a bit stupid saying this, but some people don't really realise this, is that when you do get involved in buying these beaten down dogs, and this is what I really do like doing, is buying these beaten down stocks that are just absolutely falling off a cliff, and thinking they've lost half the value for something that will only affect them in the short term. Those are like the key buying opportunities that I love buying. I love buying great companies that have had a massive overreaction in the share price. I think this is that with ASOS. But when you are buying these awful dips, people sometimes forget they are on awful dips. There's a lot of fear out there with these sort of stocks, and I generally thought this could have been the bottom back in July time, and then boom, we've gone down another 15% from here. People don't really realise that if you are getting involved in these sort of companies that are massively on a falling knife, the chance that it could go lower is still there. Even though it's lost a lot of value, it still happens. And sometimes I see a few people that kind of see these opportunities that I'm buying and buying them, and then they go down like another 10-20%, and like, oh, it's gone down, what's going on, I hate this stock, it's a really bad pick. And it's like, no, you're just getting a great company at even cheaper prices to make more money, which I think is total mindset. Is something that you do need to learn in the stock market, but I think some people do make them sort of mistakes with them sort of things, and you do kind of need a bit of a better mindset. But hey, anyway, getting back onto ASOS, and we have had a bit of a bounce here, which is really good. So with this little bounce here, I thought, you know what, I'm going to take a punt here, but you can see we bounced here and then we did go lower, but I thought, you know what, bounce here, we've got a trading update in a few months, and when the trading update comes out, that might be see it carry on from here, or we could go lower. So I thought, you know what, I'm going to start a position here and then average in over the next kind of couple of trading updates and see where the share price goes. But over the next kind of 2 to 5 years, I do think it's got a lot of upside. 3.2 billion market cap, 18p ratio, and this is historically the lowest it's ever been, and also a company that does ASOS's growth, which we will go on to in a bit, doesn't normally trade around an 18p ratio either. Now, like I said, ASOS is very volatile. It's had one massive dip here, a massive dip here, and we have had a recent dip in the share price here. Always had a quick look to see what's going on in the share price. Turned out back in 2014 it was a profit warning. Obviously a lot of problems with a lot of the supply chain in China, which caused a bit of problem, and that was the other share price drop. 2018 was once again a profit warning. Had a lot of problems with the IT side of it as well, which really affected sales. And you can see the company historically has dealt with them. Obviously the share price, massively lost half its value when the company came back. So looked at this recent one. What's the recent cause on this one? Well, you have to go into the recent earnings report to find out what, or trading update, to find out what's really going on with the company and why that dip happened. So if we go in the recent trading update, it was actually really strong. If we look at the sales in the UK was 60%, the EU was 20%, and the US was 31%, giving them total group revenue of 31%. So that's really strong. Obviously, there's some CV numbers in there a little bit as well, considering this company does about 20%. So a really good year. Obviously, it probably won't carry on doing that going forward, but still very good. They also announced a new partnership with US-based multi-channel retailer Nordstrom. So they're going to sell a lot of their products through Nordstrom as well, which obviously could help that US sales growth a bit more. Also talks about their Topman and Topshop and Miss Selfridge purchase. So if you don't know what happened earlier this year, is ASOS actually bought Topshop and Miss Selfridge. So these are going to add it into their own brands. So obviously at the moment, ASOS, what they do is they sell clothes through other brands, but also they do have some of their own brands as well. So this is going to help the company going forward, because obviously with these sort of things you would hope they make better margins on them. But there was one sentence which basically has caused the company to half its share price, and it is crazy to think that one sentence in a trading update can cause this much pain. But it said that the final weeks of June saw a softening due to the impact on consumer demand of continuing CV uncertainty and unseasonal weather. So it basically went to say that going forward there's some weak sales. Now obviously the thing is there's no numbers here, we don't know how bad it is, and this is what I mean when we go to the share price point of view, is that at the moment we were naturally downtrending, but that sentence there has basically caused this big massive drop here. So that one sentence here, and it is crazy to think that one sentence basically caused like a 50% impact on the share price. But basically, that's what it caused. There's a lot of uncertainty in that sentence. There's not really, we are seeing how much weakening, percentage wise, will that affect profit, will that affect revenue? And that's the big uncertainty here. And I think it goes back to this 2014 and 2018 situation. Is like, okay, is this going to cause, one of those problems here affect that revenue and profit that much? Now, considering these were massive problems, that happened in here, and that was a 60% drop in share price when they happened. To say that we're currently down 43%, a little bit of a softening of sales to cause that much dip seems to me like a big overreaction. Now, that's the thing, we don't know exactly. This is a big thing that I'm saying here. There's that risk that because we don't know how weak that is until we see a trading update with actual numbers, if it's weaker than what we thought because there's no clarity there, then the share price goes lower. But if we see here where it's the softening here, and they say because we don't know if Freedom Day is coming, if it's unseasonal weather, we don't know if that's like, that's just going to be the month of June. August, September, still very strong sales. And if sales rebound in the next few months, then what happens with the share price? It bottoms out here. And that's a big thing here. That's why I'm being very cautious, because we're at a point here where we don't have clarity how big that softening is. And until then, that's going to be the big decider of, do we go up from here or do we set new lows? And that's why I'm just carefully averaging into this one at the moment. But like I say, I think this is a fantastic company, you know, a 5% dip on a fantastic company and a bit of a overreaction in the share price. I'm going to start buying it. Look at the growth here. Historically, it's put in decent profit growth. It's put in very good revenue growth. Like I say, we're picking up a 20% revenue growth company here. Financially, the company is pretty strong. There's not any debt on the balance sheet. Cash balance wise, it's a little bit lower, but obviously it's just been buying Top Man and Top Shop for a bit of money, so fair enough there. The CEO has been in charge of the company for 6 years and obviously went through the 2018 problems here as well. So yeah, I think that we've got a bit more of quite an experienced CEO here. And you can see there's a little bit of ownership in the company as well here. You can see here that Nicholas Robertson does have a bit of a stake, 3% in the company, who is the co-founder of the company. And just on a P ratio point of view, you can see that this company is, you know, a 20% growth company, puts in really good profit, strong balance sheet as well. You know, a 18 P ratio, in my opinion, is quite cheap. You know, and a company like this sort of growing, you know, a company at 18p is a company that, you know, grows 3 or 4%. Like we said with ASOS, this is a company that historically puts in 20% revenue growth. So this company normally, well, should really not trade at 18. It should trade at a bit of a premium, you know, somewhere between that 30 to 40 range. So on a P point of view, I do think that's a little bit low. And then when you factor in, and I did a bit of a number crunching video on Patreon about this, is that if we do start factoring in 20% revenue growth and how much of that goes into the bottom line, eventually you start seeing in my opinion, in the next 2 to 5 years, 100% upside in this company, and that's why I started buying it. So yeah, overall, I'm being very steady with this one. Like I said, I think there's potential for a lot of upside, 100% upside, but I'm also being very careful with this one as well, because I do feel like there is a lot of uncertainty here, and it does have the potential to go lower. And with that potential to go lower, I want to make sure I still have room to average into this position. But like I said, a really good UK company with good profit, good revenue growth, trading, at my opinion, at a little bit of an undervalued share price already, and I think it's just one of those that I'm seeing it a bit beaten down, a bit of a, sure, there's bad news out there, but does it deserve to nearly lose half of its valuation? In my opinion, that's an overreaction, and that's why I'm potentially buying this one and capitalising on the stock market overreacting to some news. But like I say, it does have that risk to go lower. At the end of the day, though, if it did go lower, then I would just take that advantage to kind of build that position into this company, because in the long term, I think ASOS is here to stay for online shopping and online clothes shopping anyway. So I hope the video was useful. If it was, hit like button. If you're new, subscribe, and I'll see you next one.